was a very, very interesting week, very volatile week. The next one is also expected to be significantly volatile since we have inflation to look after and retail sales in the US. And let's not forget the ECB as well. Sorry for that. It was a push notification that the NFP will be soon out. Let me share in the meantime my MT4 as well. This is your session, as I keep saying. Feel free to ask anything you want. So ask anything you want. This is your session. So because I want to share the calendar as well, before we go through your questions, I have put on the Nasdaq in a 30 minutes chart. Actually, I will get back to the basics and have my nice, and I will just, the dollar index is the NFP after all. So we really, really need to have a look on the, we need to have on the dollar index. So until we have the data out, if buy or sell, okay, dear. So let me share also the calendar, or I'll put it on just on the next slide, calendar. So remember, we had a pretty interesting ADP and jobless claims yesterday. Okay, that pretty much just added to the scenario of a really tight labor market. Now the expectations, let me just share with you the calendar as well. The expectations are standing at 205. How can I do that? Entire screen. And I will drag and drop. Yes, I think I'm gonna do it like that. So we'll have it side by side, okay? So the expectations are for a 205,000 jobs, okay? Which is it's big. So if it missed expectations, okay, if it missed expectations, overall, that will mean that the Fed sees some kind of an improvement due to the aggressive tightening. But guys, considering what we have seen from ADP and jobless claims, considering that very massive number that we have seen in the last NFP number, this scenario looks a bit unlikely. Today is expected we are expecting to see another big number. So this will add to the scenario that a Fed will need to get aggressive, and that's why you're asking me, Thabone, buy or sell. Remember, NFP is very volatile, so I cannot really tell you what to do. What I can tell you is that during the release, we're gonna see some shakes like that, bam, 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 bam. But if the number, once the market comes down, if the number comes way higher than expected, implying to aggressive tightness from the Fed and etc., that could boost further the dollar. So on the scenario, so strong number today means more rate hikes, higher for longer from a Fed, and that means that is expected to have positive impact on dollar, because the higher the interest rates, the more expensive the dollar gets. Okay, so that is what theoretically means. But guys, during any release, especially the NFP one, until the markets calm down, what we're gonna see is something like that. Okay. Now, if there is some kind of a surprise and it slows down significantly, then that could add pressure. But let's wait and see. During the release, we cannot really tell a lot. So okay, guys, I cannot tell you what to do. I cannot tell you buy dollar, sell euro dollar, and etc. What I can tell you is that a higher number today than what is expected could support further the dollar. A lower number could pressure dollar. This is what I can tell you. Okay, but wait until the numbers are out. I mean, don't try to predict. Okay, don't try to predict. Wait to see how the market will comprehend and understand the numbers that they will be out in 4 minutes before you take your decisions. Okay. And we're gonna scan through the markets anyway together. The dollar is bullish, should sell then. Not necessarily agree with you, but nevertheless. So Bitcoin, okay guys, okay, I cannot analyze any market yet until the data are out. Good afternoon, ma'am, please, how can I learn fundamental analysis correctly? 85%, I took trade based on technical analysis. Okay, Daniel, first of all, try and watch anything that we have on the website, any educational thing that we have on the website, terms, glossary, videos. Join our webinars, are free anyway, and also Tratimo is Tratimo.com is a very, very, very helpful, educational, free website to start with, along with what we offer anyway for free. Okay, that's what you should do at the beginning, at least. What is the expectation today on pair pound yen when the NFP news come out in few minutes? Okay, pound yen, Sahamat, is it's one of the most volatile currency pairs that there are out there in the world, and since forever, it's the most volatile of all. Yen, okay, don't forget that yen is a dollar safe haven. So we could have a significant move in pound yen, but nonetheless, don't forget that in the end, what matters is the gap that there is between the pound and the yen. What I mean, the gap there between the ultra accommodative Bank of Japan with no changes in their policy, and the fact that the Bank of England get a more aggressive, increases rates, so the interest rates have they're way apart. So that's why the overall trend of pound yen is to the upside, with yen being the weakest against the pound. Now, if you want me to analyze just intraday what's going on, please guys, I need to wait for 2 minutes just to see how the market will respond to their release. So okay, it already started to refresh again and again. Come on. I have a lot of stress today. I don't know why. Oops, it took me down. Come on. Let's wait and see. Because I have a lot of stress actually, because after that massive number the last time, I'm really curious to see what will happen today. We've seen a lot of consolidation until these numbers were out. A pullback due to the latest news about the Silicon Valley Bank and its dip by 60%. But nonetheless, NFP. So this limited pullback that we've seen in dollar might reached to its end after the announcement. So come on. Oh yeah, it's out. And come on. 311. Oh God. Once again, another massive number, guys. Another massive number. That's supposed to be, that tends to be bullish for dollar. But let's wait to see how the market will react, because we might see that number implies supports the Fed decision to increase rates. But look at that. On the announcement, dollar reacted opposite than theory. So is this some kind of an immediate reaction, or we're gonna see it jumping up again? So this is why I'm saying don't rush yourself. Wait for the data to be out. Wait for the market to come down a bit, because the gap down lower, it doesn't go in line with the data, the numbers. So let's see the numbers, okay? And we'll wait for this candle to. So NFP, very, very strong NFP number once again. So clearly presenting that the Fed increasing interest rates is the only way. But what we have over here, average hourly earnings decline in February at 0.2% from 0.3. Unemployment increased. Okay. So there is a mixed picture over here. So we still have jobs way higher than expected, but not everything is black. Not everything is black, because unemployment rising. This is what we should see in a recession, right? Unemployment rose, average hourly earnings decline a bit, okay, which this is something that goes a bit in line with the really high inflation, with the tightening of the Fed. But this is a very big number, so supporting the tightening of the Fed. So as soon as the dollar settles a bit, that should support the dollar, I'm afraid. So a very big one, massive pricing in. So the headline is really strong. I don't think the markets will ignore this number, regardless of what's going on in the unemployment and the lower than expected hourly earnings. This is a very strong headline in order to be ignored, regardless if unemployment has rose and wage growth is below expectations. That's why you see all this indecision, guys. It's because of that. It's because it's a mixed report. Very high number. Lot of new jobs, 311,000 more precisely. From the other side, unemployment is higher and less wages than expected. So it's a really mixed picture. From the one side, supports for the tightening. From the other side, it seems that the average hourly earnings and the unemployment prove that the aggressive tightening of the Fed might have an impact in the labor market, not significant one though. So obviously the markets right now don't know how to interpret that. Okay, we have the Canadian numbers out as well. Unemployment eased a bit. The change is positive, so more people are employed than last month. So it's an overall good numbers, good data from Canada, but from US is a very mixed data. So let me just check your questions as well. Just give me a second, please. Yes. Okay. Yeah. Just have in mind that the headline cannot be ignored. It still supports the Fed's decision. So it's Friday though. Let me just. So what is key, guys, for tonight? Okay. is the dollar to sustain this floor, the 104. Double fractal. Double fractal. So this floor is expected to be secured by bulls. This floor over here. Okay, because after all, the headline is really strong, supporting what I mentioned. But it's Friday as well, so we might see some profit taking. Okay, that might explain why the dollar is right now is diving. Okay, it's getting lower, but I'll need to wait for the candle to close to see how it will close in order to take any decision. So let me just come on. So you should have 4 significant lines in your dollar index. The 104, okay, so I will zoom in a bit. The 104, the 103.85, and to the upside, the 105.85, okay? And the round 105 line as well. So I will put it in a clear, let me just fix this mess a bit. Oops, Control Z. Okay. I want to change that one to 585. Okay, 4 lines, sorry. This range over here, 103.85 and 104. 105 round number in the mid of this 3-day decline, and the top 105.85. Okay, theoretically the news today should, at the end of Friday or soonish, they should provide some floor to the dollar, because after all, this such a big number adds more to the 50 points rate hike from the Fed. So that should provide a floor. And this floor is over here. So in this floor over here, we might see a really the bulls to defend this floor and eventually turn the dollar back higher. If we don't see that, then it means that the dollar could dip down to 103.20, which is the mid of our 1.5 month trend, and also the 50-day moving average. Okay, now a rebound, I don't know whether I can draw, but okay. What have I done? Yes, so now I want to draw. So a retest of this area should see a rebound up to 105. Okay, over here we might see some kind of a defend, consolidation, etc., until it managed to break it eventually and move back to 105. This is not for today. It might be for today as well. I mean, it might happen today, it might happen ahead of the US inflation next week, okay? So this is just an indication. If for any reason we see the asset breaking this very strong support level, then your attention should turn to the next support, which is this one. Mid of this trend, and also 50-day moving average as well, okay? Let's not forget that the inflation is on Tuesday. So after what happened today, and this huge number over here, and this indecision, what it will clear even more the picture will be the inflation. So let's summarize before we go down to your questions. Another strong number. January was a strong one, but February is also a very, very strong number. And it was pretty much expected, but it's just a confirmation right now. That adds to the Fed hike at 50 points on March, especially after what's happening right now with the US banking sector. So that will mean that the banks will continue to struggle. Let's not forget that. So it really makes the Fed's job even harder than what it actually is. So we have all these risks right now in front of us. That's why Tuesday inflation is even more important right now. So let me check whether I missed anything. I think not. Oh God, it's just a nightmare. So going down. So this was an analysis for the daily chart. Okay, guys. Even if you're a day trader, intraday trader, scalper, the lines that I just put on is something that you should add as well in order to keep an eye on what's going on. Now, let's move down because a lot of people were asking, should I buy, should I sell, blah, 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 etc. Okay. Let's go to the 1 hour chart. On the news, there is a lot of pressure. Though we cannot really take any decision, I will put the 30 minutes chart, okay? Because this candle is not over, okay? It's not over. It gapped down indeed, okay? It gapped down, it gapped down to 104.27. With the next level, another 27 points lower, okay? But it hasn't closed. So we need to monitor it until it closes, okay? So it keeps pressure down. So next floor, 104.2. Momentum intraday. Now I'm in a 30 minutes chart, guys. The moving average are pointing lower. It's outside Bollinger's. MACD is negative. Stochastic keeps pointing lower. Can you see that actually? Or I'm in front of it. Okay. And I need to put this a bit lower. Okay. Okay. So stochastic keeps pointing lower, RSI turn lower, so that you need to keep an eye on 104 because considering the intraday momentum, it could retest it. Now I'm referring to all the intraday traders, okay, scalpers and etc. This is just in the short term, in the 30 minutes chart or even less, okay. So that is just a clear fear and a lot of misinterpretation of the data, but or just to be clear, let's not forget, guys, that it's Friday, so there might be the sellers pushing the dollar lower in order to buy it in a lower level because the data are clearly supporting theoretically the dollar. So that might be a push lower until in order to be bought at the lower territory, okay? That's why I'm always saying, wait for the markets to calm down. Okay, some of you want to trade the news, fair enough. So I'm here for those that they want to trade the news as well. So let's go down to the 15 minutes chart. You see, gap down, bearish candle below the 104.27, MACD negative, stochastics showing that there is still some further room to the downside. But that RSI over here already flattened. So that might be already at its end. Okay. Else break support and go. Oh, let me check what you. Else break support, go down. So 50 buy and sell. Yes, is the Jorge is this because from the one hand the headline was strong, okay, so we did have a very, very big number of new jobs once again, but from the other side we have unemployment higher as well, and that is, and it's logical, is understandable for the market to struggle to understand or to understand the report. That's why we are seeing this indecision. That's why we are seeing this. There is not a clear sign of a sell-off. There is no clear sign of a rebound, because obviously, yes, the Fed and its aggressive tightening, it did have an impact on the labor market. If we consider the unemployment rising and the hourly earnings slowing down, but not a significant impact. That's why we have another 300,000 new jobs. So that means that he needs to do more. And this means more interest rates, and this means a stronger dollar. Okay, that's why over here we're seeing dollar struggling to settle. Everything will come down as soon as this the markets count down. But yeah, guys, theoretically this data just support the dollar, and this might be some a panic, first of all, fear, and as I said, some kind of a buying the dip. Who knows? Let's wait and see. God, just save me. What you have done, guys? What you have done? When do you recommend joining the market? As soon as we have at least 2 30-minute candles finished. I mean, we need to see how this candle closes in order to take a decision. Okay, I don't know, Jorge, what kind of time frame you're facing, you're trading, but we need to see. We need to see how it will end up. Okay, so it is indeed a decline, and it has been a significant decline since yesterday. It was the anticipation, but mainly it was the thing with the Silicon Valley news, presenting that the banking sector has been significantly hit from the deposits, actually, of the banking sector. So that's why I've seen this dip, but this is expected to, from the perspective, expected to settle, to run out of steam. Now, Jorge, don't know what kind of trader you are. If you are an intraday trader, though, we need to see this candle closing, the 30 minutes candle at least closing. So that will happen in 11 minutes from now, at least to close, in order to see. Because if it closes below 104.27, okay, there might be another attempt to retest the 104, which is a round number and a very important support level. But it's already outside Bollinger's, so it's oversold already. It's oversold already, guys. Oversold. Limited move. That should be a limited move also, as if we consider the fundamentals. So be careful for those that they have decided to enter the dollar or dollar crosses in a short position. I mean, selling the dollar index. Be careful, because it's already oversold, so it needs a correction. It needs to get back to the technically needs to get back to the Bollingers, and from fundamental perspective is going on the opposite direction of the fundamentals. So eventually it needs to go along with the fundamentals, and this means a higher dollar eventually. Okay, so be careful. Is the job of no for the cat not supposed to be bullish? Let me a dollar cat. Let's check a bit until this kind of close. Let's check a bit dollar cat. So my dear friend, okay, this is the dollar cat. Dollar cat is diving. So this presents a strong Canadian dollar against US dollar. So in line with this current dollar weakness and a strong Canadian dollar, because the Canadian data. Let me just show the Canadian data once again. Okay, the Canadian data indeed were good. Why I'm saying that they were good? Because the unemployment rate came in line. It was steady, slightly below expectation, but steady from January, so it's okay. Participation rate also unchanged. Average hourly wages grow. Net change in employment grow, double of what was expected. So that suggests that still the Canadian labor market is quite tight, but not significantly tight. So that's why also the Bank of Canada paused the increasing of interest rate hikes, because the inflation started to cool down. The Canadian inflation started to cool down. The same stands for labor market, and that's why it's paused. And that's why the dollar cut base here is pretty much on the dollar weakness rather than the strong Canadian dollar. This is dollar weakness and not strong Canadian data or something. Okay. So the next floor for dollar CAD is at this morning's yesterday's peak. Sorry, I will put this in yellow. Is at yesterday's floor, the 137.50. So it crossed the intraday Ichimoku. The Ichimoku line over here, the Kiju Sen, as called Kiju Sen, is diving. So that there is pressure to the downside. So the next support for dollar CAD is 137.50 intraday. But that's intraday. That's for the near future intraday within the day. So overall, the dollar CAD is to the upside. The dollar CAD. Let me just show you something. Overall, the dollar CAD is in a bullish outlook overall. This is the daily chart, and the reason why I'm showing you that, because I want to show you that it broke outside the descending triangle since October 2022 and keeps moving higher nearly for more than a month now. It's back to a year's highs above Ichimoku. Ichimoku also turned positive. The lines are pointing higher. There is a bit of a dive in the Tanku-Shen line, but that's intraday. So the picture suggests that overall the outlook for dollar CAD overall. So daily, weekly, monthly, the outlook remains positive, but there are some intraday fluctuations. So intraday pullback, a correction, let's say, of the current trend. So immediate floor 137.50, and the very next one, if that one breaks, is the 137 number. So is Ichimoku line coinciding with the ceiling that we have back in November and December last year. Only if the only way to that I could suggest that this strong uptrend has run out of steam and could reverse. So the only scenario that could suggest that a new trend has started is if we see the dollar CAD breaking below 137. Okay, that will suggest a new new trend for dollar CAD down to 136 and even 135 level. Now, yes, Jorge, I agree with you. The fundamentals is the base of the technical analysis, but yes, for the medium and long term, I mean, daily, weekly, monthly, there are trading, trading offers also other opportunities. I mean, it offers the chance to trade in a very fast environment, such as the 30 minutes and 15 minutes chart. So this is a bit different. Intraday, you need to rely a bit more on the technicals, but having in mind also fundamentals in order not to be stopped out quickly and etc. But intraday, you rely firstly on technicals, but you need to keep an eye on the calendar and when the news are announced and etc. So I need to check your questions. Technical analysis is always the best way to go, but it wouldn't hurt to check on fundamental analysis. Yes, I totally agree with you. The volatile movements of EVA help price to reach technical levels. This is what really usually happens. Intraday and in the long term. Oh, yeah. Let me just keep an eye on what's. Let me check if I have pivots in this PC. It's my navigator. I want my navigator. Yes, I want my pivots on. Pivots, indeed. Okay. You see, it broke a second support. It broke a third support of the day. And now is the time to see whether it will in 2 minutes. This is, sorry, guys, I went back to dollar. Now is the time, and I will get back to the 30 minutes chart. Change a bit the color over here. Sorry for that. Yeah, no. That's not helpful, right? You cannot see the pivots, right? Let me just fix a bit this. I want it to be bolder colors input. So that's not helpful. It should be darker. Yeah, you see that? So it was consolidating the whole day around the second support of the day ahead of the NFP. And on the announcement, due to the panic, due to the misinterpretation of the data, some buying the deep opportunities or something, they pushed the price lower to the third support, but it seems that it will not manage to close below it, because I told you so. NFP number is so strong that it doesn't go in line with all this selling, and it's done. It's closed. Now I'm happy. Okay, 30 minutes candle. Can you see how dodgy this candle end up? It closed really close to the open price. So now it's going in line with the with the data. The data were bullish for the dollar. So you need to be careful, guys. You need to be careful because this gap will need to be filled. Sorry. So it needs to be, yes, everything good. So it needs to be filled. That's just stating more and more and more interest rate hikes. So the fact that, and as my friend said over here, I'm gonna borrow your comment, dear Fabang. You said fundamentals help to reach the technical levels. This is what we're seeing over here. You see, the fundamentals, the interpretation properly of the data have helped the market participants to hold this level, the third support of the day, and the 104 round number intact to close this session above it. Okay, so reach the technical levels and close above it. So it triggers the volatile movements, as you said. Always respect technical analysis, and this is what we are seeing so far. So a big leg down, but the fact that the close price close really to the open price suggests that bulls are trying to support the dollars. The bulls are trying to defend the 104 territory. Okay. Dollar is negative. That should be based on the fundamentals. That should be limited, dear Ivan. I don't know what you are trading. Yes, it is indeed negative right now, but it was on the announcement. On the announcement. That's why if you want to be, how can I say that? If you're not really sure what kind of position you should take, better to wait, the data to be out, the markets to calm down, and to actually be able to interpret and see the signals, read your chart and take a decision. So what I'm seeing over here in this 30-minute chart is a candle with a big leg down, but small body candle. So that tells me, and on the third support of the day, that tells me that there is a big fight between bulls and bears, but bulls have the control. They are really defending the 104 territory over there. Okay. Intraday indicators, indicators are indeed showing this dip, like this negative, but you see, stochastic didn't manage to, where is it? Stochastic didn't manage to extend lower. It kept this floor over here. RSI crossed in the oversold territory, but is remained close to 30. It's flattened a bit. There is indecision. The price is currently outside Bollinger's. It needs to get back where it was. This is oversold condition. It's an extreme condition, and eventually we're gonna see a rebound, a returning to the Bollinger's. So, okay, I'm talking a lot, and I might confuse you. So that's why I'm gonna summarize. For those that you're scalpers, intraday traders, there's nothing bad if you take the decision to sell or buy the dollar. So what you need to check in order to be on the correct, to take the correct decision. If you decide, I'm not sure whether I'm allowed to say that, nevertheless, okay. There is currently a lot of bearish pressure, okay? But that it should be temporary because it's already oversold. So if you decide to take any decision based on this, on what I just stated, you need to be careful and to have in mind that the next immediate support is that latest low over here, 104.19, and the next one is the 104. Okay, that is the immediate support levels, okay, on this latest decline that we have seen. For all the rest of you that you're not intraday traders, but you are medium traders and etc., as long as 104 is defended, okay, then and if we eventually see a sign that of recovery, the next key resistance area to be seen is the 105. Okay, so what we are what could happen is the asset to retest 104 and move sideways. Guys, I want to clarify that this is based on what we know so far. If something else happened, like yesterday night's Silicon Valley tumble, then that could pressure again dollar. Okay, long and medium term traders, I will put the daily chart on. So 104, if breaks 103.20. If 104 defended, then a rebound is expected to 105, a breakdown of 105 up to 105.31. Why the market doesn't show a strong cross of line? You mean in the daily or which time frame? Which time frame, dear? In the intraday, it's going in line with this selling. I'm not sure what you mean, Jorge. Which time frame? Never mind. Okay, until I have your reply, let's do some other. Okay, Bitcoin. Yes, Bitcoin suffered a lot. And if you had read my article yesterday about Bitcoin, if you had read it, I was really giving some nice support and resistance levels for what happened yesterday night. Crypto, BTC. Here we are. Okay. First of all, we'll start with the daily chart. Remember, as I taught you last week, was it? But also, if you read my article, that was a very important gap to be filled, and it has been filled. Okay, it has been filled. So, and why it's so important? Because it needed to be filled, but also it's changing the outlook for Bitcoin. So, the strong dollar, the aggressiveness of Fed, the failure of one of the close down of one of the most important and big crypto banks, the Silvergate, is shut down. So all these reasons are responsible for Bitcoin's dive. Currently, it has filled this gap, but it's below the 50-day moving average, the 200 moving average, the 50 point, the mid of this of 5 months, not 5 more, November, December, January, 4 months trend. So now the outlook for Bitcoin is negative. You see, even MACD switched lower. The RSI is at 30, flirting with 30, and the outlook has changed. Now the attention is on 19,193 is the 61.8 Fibonacci level, but also the 1900s. Okay, so this is the next floor for Bitcoin. A break of that clearly opens the doors to 2022 bottom. So that means 17,000, 16,000, and etc. So for the time being, the next support is at 19,000, 61.8 Fibonacci level. And as my friend Fahasa said, in technical analysis, key support and resistance levels matter. There are some crucial levels to be watched. Round numbers. 61.8 Fibonacci levels is the most important and strongest retracement level. 50% is most important, and the fact that 50 was broken, 200 moving average broken, 50 moving average broken. All this, along with the turn of MACD negative, the decline in RSI, and what can help you with RSI. I will get rid of stochastic, because stochastic I have it for 1 hour chart, not daily. So look at that. Look at that. The 50 is over here. Okay, the RSI crossed below 50. So on the beginning of March. So that was the very, very first indication that the outlook is changing from neutral to negative. And it keep diving and diving and diving. It hasn't oversold yet. It's above 30, so that is further steam to be covered. Okay, that was on Bitcoin. Intraday rebounded a bit, needed a correction. It was oversold this morning and yesterday night. Dive further, enter Bollinger's, rebounded a bit, but over here this rebound is looking to run out of steam already, because the fast moving average have already clashed, indicating that this rebound is running out of steam. So that's an indication that we might see the resumption of decline in Bitcoin intraday as well. Let me put the 30 minutes chart. Up, dive right now, flat moving averages, MACD still negative, RSI points down, so that implies to a limited, to the fact that this rebound in the last 2-3 hours run out of steam already, and that might mean the resumption of decline. Whoa, gold, yeah, that's a safe haven. When people don't know where to go, they fly to safety. And this is why we have seen since yesterday gold appreciated. Fundamentals, though, don't support a bullish gold. So overall, for the next few days, weeks, not days, okay, not days, weeks and months and etc., the outlook for gold is bearish, especially for 2023. Okay, so the rebound that we have seen yesterday, it was on the tumble of Silicon Valley. So people wanted to store their money into the safety of gold. That's why we've seen this cash flow, this jump on gold. And today, that's the same reason, flight to safety. But we'll zoom out a bit, okay, because I want to find our next resistance area. Our next resistance area is at 1857. It's the high that we have seen yesterday, okay? So I will put the line as well. So 155. Okay, so sorry for that. What I want to do right now, let me just, oh, no. Okay, here. So I want that one. Perfect. Actually. And if I put the 4, so one more down. Okay, yes. Sorry, let me fix it a bit so I can analyze it. Okay, so the highs of last week's highs remain the key resistance. Okay, the rebound, it doesn't change the overall picture for gold. Okay, it doesn't change it. What it could change the overall picture of gold, it will be and move above this one, above 38.2. So above 1865 level. Okay, so what is seen right now is a rebound due to the latest news, Silicon Valley, plus a bit of a boost on the NFP. I mean, the fear that turns some cash flows into gold, but this is expected to be limited. Why? Fundamentally, I have already explained it. Now let's technically explain it. You see, MACD is still negative. Momentum is still negative. There is an easing, so there is some bullish pressure, but it's still below zero. RSI at 50 hasn't managed to cross 50 yet. Where is it? It's more precisely, it's 50.4 right now. So it hasn't managed to cross above 50. It's below 50 level. Okay, so still negative. The asset still at around 25% recovery from the dive that we've seen in the beginning of the year. So not a significant recovery in order to suggest that the overall outlook is changing. Okay, so this 2 days boost could eventually run out of steam. So you need to keep an eye on the next resistance area, which is at 1854. This is in 1855, 54. In general, these 4 candles over here. This is where you might see a pullback, a retracement. Okay. Let me use the intraday basis as well, template, sorry. Where is it? Here we are. Let's see, let's check a bit in the 30 minutes chart, our moving averages. They keep pointing higher. My 5 and 9 keep pointing higher. So there is still a lot of steam. You can see also the bullish crossing MACD. Stochastic keep pointing higher. RSI is okay. So intraday bullish bias holds. Okay. What the ATR has to say. ATR. So ATR for the 30 minutes chart suggests a 4.33 points movement. So there is still steam to the upside intraday, but overall this expected to be a limited move. Questions. Euro dollar, pound dollar, Kiwi dollar, Euro dollar. Actually, we keep cutters. Yeah, Euro dollar. Let's start with the daily. Next week, ECB is expected to increase rates as well. Okay, but Euro dollar is seen to the downside for the whole February, and so for in March. It crossed below the Ichimoku cloud, and that is adding to the bearish scenario, but is still holding significantly above 105. 105 is a very important level to be seen for euro dollar in the long term, in the medium term. Nonetheless, okay, let me just get back to my usual template. Okay, so key support and resistance levels ahead of the ECB next week is the 105 and the bottom of March and February. So that would be somewhere 105.26. Let me put it just slightly, actually 105 round number, and beneath, slightly beneath these levels and the Bollinger. So that's a key support level. To the upside is the latest fractals, these two. So 106.95, let's round it up, 105, 107. So that should be your support and resistance levels. That should be on. on, because for many days now we've seen just a fluctuation between these two barriers. Okay, so but the picture remains negative, okay? But because we have ECB ahead of us and ECB is expected to increase rates as well, we might see some further boost on euro. Okay, so let me get back to the 1 hour chart. So what do we have over here? This is the 1 hour chart. It was consolidating the whole day, breaking it just now, extend higher, MACD is positive, stochastic is positive. Yes, RSI cross 70, flat a bit. It's already outside Bollinger's. So it might run out of steam already. Let's zoom out a bit. Okay. There might be some consolidation from now onwards there because it's oversold already. So keep an eye on 106.40. Okay, 106.40, but it's outside, so it needs some correction. Okay, it needs some correction. You see, if this candle, this 30 minutes candle, close, if it breaks, actually not close, if it breaks this latest high, so if it breaks the 106.44 level, then we might see further boost on euro dollar. So the next support level, if this the next resistance level, if this happened, but now I'm talking to scalpers, the next level, if something like that happens, is the latest high at 106.70. So we see the euro dollar breaking this latest high at 106.43. It means that bulls are still on, are still in control. So the next level should be 106.70, could be retested. If and only if we see the asset crossing about this latest high. If it fails in 8 minutes, because this 30 minutes candle will close in 8 minutes, if it fails to break above it, then we might see a bit of a consolidation, some ups and downs around that area. So something like that. Okay, and so on and so forth. In this case, you need to pay attention in a potential retest and pullback below the 106 again. Okay, pound. Okay, here is pound. The daily chart, as you can see, it's below Chimoku, but there is some the Chimoku lines are mixed. The Tankujen is pointing down while the Kichu is pointing up, so that suggests intraday bullish bias while the overall outlook remains negative. Okay, so over here we have a channel. We have a channel in pound. Let me show you the channel. So we have a channel. This is the daily chart in pound. So we'll put the channel on for you to see. Where is my? I want more. I want my regression channel. Where is it? Oh, sorry. Sorry for that, guys. Yeah. So I need to make it bolder. Okay. And okay. Here it is. it was in a channel, and I want to do another one as well. The reason why I'm doing that is because I want to have immediate support and resistance levels as well. Sorry. No. Not ideal, but okay. I think you got the meaning. Okay, so it's just to find out further support and resistance levels, but it's not ideal. So I'm gonna just do it manually. So I'm gonna connect. No. Let's stick to that. Yes. So zoom out. Oh, zoom in actually. Bounded, cross the middle line. Rebounded, cross the middle line. So resistance lies on the upper of the channel. Okay, and this is where we might see the run out of steam and pull it back down again. Because overall, the pound remains negative. MACD negative, RSI below 50 since the beginning of the year. So this is in regards to the overall picture on pound. So you need to keep an eye on the edge, the upper line of this channel, but also over here in this area, which is the double up fractal over here, the 50-day moving average at 121.42. Only a break of the triangle could indicate a retest of 122 territory. That's intraday. That's in the daily chart. Intraday now, there is a lot of steam since yesterday for pound. And then there were a lot of hawkish comments from Bank of England officials adding to the pound's strength. So intraday, we have a really strong cable. You see, overbought, corrected a bit again further to the upside. So in intraday, it's not the same as euro. Intraday, there is still a lot of bullish bias. You see, MACD keeps rising, stochastic keeps rising. Can you see that? RSI also, there is no indication of a pullback. So I'll put the 4-hour chart just to find immediate resistance levels, but it's pretty much another 15 pips higher, so 120.65, okay? And the area that I mentioned earlier, the 121.40, this double up fractal. So guys, intraday, still an uptrend, bullish bias for cable. Moving average, as you can see, intraday I keep pointing higher. MACD is still growing. Stochastic is still growing. RSI still, even if it's overbought, but it's still pointing higher. So that suggests for pound a potential retest of 120.65 and 121.40. Okay? This is it. Can you see the 30-minute chart? Still on. Boom. Close in the Bolligers, and again, boom. And it's in a minute, that candle will close. And if it stays that big, that means that there are still a lot of bulls in the pound dollar. Now, and it did close above, yeah, see, rising. What else? Dear unknown person, you said 100% sell euro dollar and gold and pound. That's totally wrong. This is the vice versa. I don't know how you end up with this conclusion. So, when do you know when to buy or sell? I'm not sure whether you're familiar with the technical analysis, Stephen. Check your signals, what your moving average are suggesting, what the candles are saying. Guys, the stronger the candle, the more the increasing bias. The size of the candles, their body, their tails, you need to pay attention to the candle. You need to try and see what they are telling you. Look at that. Full body, not full body candle, sorry. Big candle, no tail below. So that suggests that bulls were in control. Another bullish candle with no tail higher. So this implies that there has been some fight from sellers, but they didn't win. Bulls won again. So even we see a bit of a consolidation or something, there is still a lot of momentum. Look at moving average, keep pointing higher. MACD still rising. Stochastic, look at that, still rising. Look at that, still rising, still pointing higher. RSI the same. So read your charts, or if you don't know how to read your indicators, try to see what the candles are telling you. Sorry. Why you keep saying, guys, sell gold? Why you keep saying that? Gold is not, look at that. Boom, huge candle. Another one. And keep rising. Okay, yes, it's overbought. It will end. It will eventually need to some kind of a correction. But the time being, though, there is a lot of bullish bias. MACD keep rising, stochastic rising, RSI the same. Full body, well, not full body, but very, very strong bullish candle. So 1855 is what we said earlier, is the last week's resistance is back into is back in focus. Okay. Okay, yes, if you were referring, dear Noshman, in the overall picture of gold, I mean long term, day or medium term, like daily, weekly. Okay, yes, the dollar, the gold is in a bearish outlook for 2023, but that's the overall outlook. And that if you are a long-term trader, okay? But yeah, intraday and so far this week is quite bullish. Oh, I missed a lot of questions. Okay, I cannot say join now or join later. As soon as you're sure with what you're saying and what signals you're getting, okay? As soon as the momentum is strong. If the momentum is not strong, then it means there is a lack of volatility. So when to join depends on a lot of things. Your time frame, your signals. Are all your indicators agree on the same signal? I mean, selling or buying? I mean, okay, do you get what I mean there, Jorge? Still in discount? Yes, Nathan. Yes, I can see that. You're right. Still a lot of discount, a lot of pressure on dollar. Oh, sorry. It's like the markets are trying to ignore the data because it's Friday, it's the end of the week. It's like they're pushing dollar ahead of the new week. But I told you, keep an eye on the 104 level, on this area, this gap between 104 and the 38.2 Fibonacci level. Still a lot of discount indeed. That's just an this is also the Silicon Valley effect, unfortunately. The concerns. So what's going on over here right now? That's why. What's going on over here right now is that we don't have the desired reaction from the market, because it was also the Silicon Valley thing. So there are a lot of concerns about the banking sector. You know, the deposit in the banks, the cracks in the bank's capital is starting to show as interest rates soar. So the pressure in their portfolios, it's adding small banks such as Silicon Valley and others into huge risks. And that is what's going on over here. The NFP was supposed to support the dollar, but now that just rose even more the concerns that what Fed is doing, and the more interest rates, and the expectation of more interest rates is just adding further risk to the banking sector. Nevertheless, guys, you need to rely on your technicals if this is the case. If the pressure from Silicon Valley continues, if we keep seeing flight to safety flows from US dollar to gold and etc., you need to rely on your technicals, and your technicals is this floor that I said. If that breaks, then the eyes turn to 103.50 and 103.24, the 50% retracement level. Okay, is retesting that right now. Rely on your technicals. Else, it is go affect bears. See what dollar Swiss is doing. That's why I keep saying, wait for the data to come out, wait for the market to settle. They have settled, yeah, there is a lot of bearish pressure still, so you can join if you want to, but be careful. Stop loss, target. Don't go out there without setting your stop loss and your target if you want to join the trend right now, okay? Sorry, I'm lost a bit. I'm not using usually this PC, so I'm struggling. What is my euro dollar? Oh, euro dollar is over here. So no, what I'm a dollar Swiss. You mentioned about dollar Swiss. Yes, sorry, dollar Swiss. It's a safe haven. Oh my god, and was the same for dollar yen, I guess, right? Let me just. Jesus Christ. Safety to it's the safe havens, guys. Safe havens. Because, yeah, obviously, the fear has turned the market participants into the safety of yen, into the safety of Swiss, into the gold, dollar Swiss, dollar yen, gold, safe havens. This is dollar yen. Big dive, dollar yen, bam, 134.94. The next floor is The next floor is at 134. Next floor for dollar again is at 134. And let me reply to my friend about dollar Swiss. Sorry. Swiss. And let me put the white because I'm struggling with the blue one. Look at that. Oh, how I missed that. Broken. Boom. Broken. Boom. And there is a lot of steam still to the downside. MACD down, RSI the same. Stochastic keeps pointing lower. RSI keeps pointing lower. There's a lot of momentum in the safe havens apparently. Dollar yen negative. Dollar Swiss negative. Gold positive. Next floor for dollar Swiss for those that they are interested is the not 9150, which is not far away, and the very next one, if it breaks, I will put the daily chart just to find the support levels, and I will get back to the intraday basis. 91, okay, round it up, 91, and then we move on to January's floor, year's floor at 90.57. So guys, on this big sell-off, the candle is huge. We close this candle, we close in 20 minutes. The candle is huge. MACD is extremely negative. Stochastic and RSI keep pointing lower. I will put the 30 minutes chart as well. So boom, boom, no tail below, keep extending lower. So that turns the attention to not 0.9158. It's indeed oversold, but it's such a big move that it doesn't show to run out of steam yet. Okay, so next support's not 0.9158. If that breaks, then 91 is the next level to be watched. Okay, but be careful because in this correction, so keep an eye because we need to see the asset closing below 58, 91.58 in order to suggest that it could test 91. 91 is another 58 pips lower than this support. So double check your MACD, your stochastic, your RSI. You know what? You can add a trend line in your stochastic. Sorry, wrong. Trend line. So connect the peaks. Connect the peaks. And as soon as you see stochastic, and I need my, actually, you know what? I need my 5 and 9. Yeah, okay. As soon as, so connect your, this is a 30-minute chart. I'm referring to intraday traders, scalpers. And so connect your, the highs of the stochastic. And if you see your moving average flattening and your stochastic recovering and breaking this line, this is when a rebound might be triggered or consolidation. Okay, that might be a sign that the decline paused a bit. Okay, Aussie cat. Woohoo. One hour. Is the least exciting, my dear friend Samuel? It's ranging a bit. Okay, rebounded, but it's a clear, this is the daily chart, by the way, Samuel. It's a clear downtrend since the beginning of the year. Nice channel to the downside, momentum negative, so overall remains to the downside. There is a clear downtrend. Bearish bias below 50-day. Bollinger keeps slowing down. It's a down channel. Now, intraday, it's a bit consolidating. It's keep consolidating, been bouncing since yesterday. Oh, no, for 2 days. Yesterday and today is consolidating between 90. Actually, let me be precise. Yeah, 2 days is consolidating between 90.86 to 91.39. Let me put the 30-minute chart to see over here as well. Okay, decline a bit, rebounded. A bullish cross of 5 and 9. Not the, but MACD is 0. RSI is not really ready to extend higher. RSI 54. No. It's just consolidation, I'm afraid, Samuel. So consolidation intraday. So may possibly continue these ups and downs within the 91 territory. While the overall picture is interesting for me because it's a clear down channel. So this 3 days boost my imply to the continuation of the downtrend. Five-minute chart, Jorge. Oh my God, Jorge. Oh, Scalber. So, okay, 5-minute chart for Jorge. Okay, apparently my 106.70 was already hit, the resistance. So, bam, 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 bam. Okay, it's ready for a correction. Ready for a correction, but five-minute chart, Jorge, for God's sake. Okay, 1, 2, 1, 2, correction, 1, 2, 1, 2, correction, 1, 2, correction. This looks to be correction, considering that there are still a lot of stochastic at 83. RSI is slowing down, but I need to detect RSI into 7 period because we're in a 5-minute chart, which boom. No, I will detect it even more to 5 because you are in a 5. Bam, 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 bam. That corrected a bit. It's steady. Okay, so that's interesting. So let's see, but it's still, this looks to be correction in this 5-minute chart, dear Jorge, because the momentum is still positive. So yeah, that candle, which is closing in 2 minutes, looks to be just a correction. RSI is still very close to 570. That floor is still kept. Stochastic still above 80. So yeah, that looks to be a correction before another attempt to the upside, if that helps you. Okay. No, MACD is not diverging. Actually, it's still rising, and you still have, by connecting the lows of your candles, you can still see that this uptrend remains intact, still there. There's no divergence. I cannot see divergence in this 5-minute chart. By connecting your lows in the 5-minute candles, you can see that they keep rising, and the same stands for your MACD. Even though I should have detected the MACD, let me detect it. What kind of scale of what kind of settings you're using for your MACD, dear Jorge? So what we have over here? No, that doesn't make sense. No, that gives no. The settings are wrong. The settings are definitely wrong. Oh, that's a big one. That's a big candle. So leave the settings right now. Let me reset it. So ignore the MACD. So it's a big candle in the 5-minute chart. So a very big one that could break that support level that I have just used by connecting the fractals. So keep an eye, because that implies to a further decline to 106.43. This is a 5 minutes chart, guys. It's a very fast environment, okay? So it's just for Jorge. Jorge, this is a very big full body candle, actually adding to the selling pressure in the 5 minutes chart. So 106.43 is the next support level. Okay, but we need to see this. Actually, I will put it even tighter. Okay, sorry. Yeah. Yeah, fast moving average have already flattened, so some selling pressure is going on over here. S&P 500. S&P 500. Further selling, obviously, extending the declines that we have seen yesterday in the whole week. So the stocks cannot recover. Anyway, S&P 500, their dynasty, it had a very nice pattern last week, a very bearish pattern, and this has been proven. So hopefully you have seen it. You have seen that. You have seen that on the beginning of the week. And the technicals are going in line indeed. If you had seen that on the beginning of the week, you could have seen that it was one way though. 3,900 has already broken. Next support is turning to, let me just zoom out a bit. It's getting down to what 3,850, and the floor in December, so 3,800, 3,800s, 50 and 3,800s, the next support level for S&P. S&P. Now, intraday, down, a bit of a recovery. So I'm going to use my Fibonacci's extension in order to find the next support levels. So the next support levels, according to my Fibonacci's, is indeed the 3853. It's the 138 Fibonacci level. So 138 is at also 1833. So 3 immediate support levels, intraday support levels for Nasdaq. First of all, is the floor seen this morning. Okay, so 38.84. If that breaks, next floor is at 38.50. Let me be precise. 50, isn't it? 52, sorry. The very next one is 38.32, and then is the round 38 level. Very, very bearish bias in general for stocks. There is the Fed, is the banking sector decline, the recession, higher interest rates. So any pullback, any rebound, it looks to be correction of the existing downtrend of the bearish market that the stock market in general, not only S&P 500, the stock market in general is in a bear market. Oh, thank you, Valandis. Hopefully I haven't confused you guys. Oh, 1 minute chart. Oh, I cannot do analysis in 1 minute chart until I say so. It will be done. So if you're using 1 minute chart, that's fine. Maybe you should stick on, in 1 minute chart, you should stick only on your candles, no indicators. Only on what the candles are telling you, and use the highs and the lows of your candles as your immediate support and resistance levels, okay? CAD yen and pound yen, I think we are done for today. Lei, I can see, Rwanda, you had a problem with your withdrawal or something. Please, don't worry. either send a message in the live chat in our website, or an email. And the guys in support, they are very friendly and they are watching everything that you're sending. So tell them your problem and they will try to solve it as soon as possible, okay? And if there is any delay, they will explain the reason, okay? So feel free to contact our team. CAD yen and pound yen. Okay, let's finish with CAD yen and pound yen. Guys, by the way, gold has already triggered the 1858 that we were telling you about. So the next one is up to 1865. Let's not forget that, okay? Let me just... Sorry. It is 70 actually. Okay. Sorry for that. CAD yen. CAD yen. What's your view on direction for CAD yen? So let's start with the daily, my dear friend Abasanjo. Abasanjo, look at that. This beauty. Let me reset my MACD first of all. Okay, here we are. 1, 2. Okay, that was a bit dodgy. 1, 2, 3, 4, 5 days in a row to the downside, and today it managed to break the 50-day moving average. This is something that hasn't been done since November. I mean, the asset moving below it. So that would be very significant today to see if it actually close below the 50-day, okay? Because if something like that happens, that means, first of all, it's a rounding top, which is a bearish pattern. And if it start moving below 50-day moving average, that means that we might have seen the beginning of a downtrend for CAD yen, the beginning of a new downtrend. But we need further confirmation. We need further signs. So you need to keep an eye, guys, on Monday to check if CAD yen has closed today below 50-day moving average, and if it keeps extending lower, because then we need to keep an eye, which we will start looking the bottom of the year at 94 and 95 level, okay? Anyway, the momentum in CAD yen is a bit vague, it's a bit neutral. Has been seen, the MACD is at 0, even though the signal remains above it, but there is not a lot of momentum to the positive momentum. It looks like the bears are slowly taking over. Okay, so keep an eye on that. Let's move on intraday though. A big sell-off, breaking the latest floor at 98.14. Moving average have crossed bearishly over here. MACD, it was negative, increase a bit. So again, some kind of a bearish cross of MACD over here. Okay, nice. Stochastic, bearish cross and dives and keeps falling. The same stands for RSI. Can you see that? So that suggests that intraday we still have a selling pressure. You see? Oh, nice. So full body candle and another massive one. Closing in a minute. So that is just adding to the pressure of CAD yen. So if you are looking, my dear friend, from the next floor, Tiara Pasaro, then you will find the next floor. Oh God. I'm gonna use Fibonacci extension to find support and resistance levels, I'm afraid. So the next one is at 261 Fibonacci extension. So 97.55, which is quite close. And let me also, oh, it's already broken that. Already did. Sorry guys, I'm just trying to heal the Obasado. Give me a second. Fibos on this late swing. So let me zoom out a bit. MACD, bearish cross on MACD. Stochastic keeps pointing lower and still there is something further. There's some area to be covered. The same stands for stochastic as well, further area to be covered. So the next support is on the 97.55 and 97.38. It's a massive candle. It already closed. Can you see that? Closed, and they are very, very big body candles in a 30 minutes chart, the Passaggio. So there are still a lot of selling bias, a lot. You need to be careful though for any signs of a stalling, whether it's running out of steam. For the time being, it doesn't look like it's running out of steam. They are huge candles. Stochastic still pointing lower. RSI still pointing lower. I will use the 15 minutes chart. 15 minutes chart, small body candle bullish over here. No, nothing, no. You see, there's no indication that the selling has stopped. So yeah, 97.56 and 97.38 are the next support levels. To the upside, if this decline stops, your immediate resistance area will be on the 98.50. Okay, a correction, I mean a complete rebound. No, actually, no. Let's not confuse things. Let's leave it as it was. 97.50 and sorry, I missed it. I deleted it by mistake. So 97.55 and 97.33. Okay. Pound yen. Let's finish with pound yen. Should be something similar. Like it looks like a bell, but a full recovery, a bearish crossover here of 5 and 9 moving averages. Keep pointing lower. Stochastic keeps pointing lower. RSI keeps pointing lower. So the same as CAD, I'm afraid there is still a lot. The bears are still in control. There is still a lot of selling pressure. So the next floor is at 162.45, which is in line with the confluence, the fractal with the Bollinger. And the very next one, this is an easy one. You can find support and resistance levels. The very next one is the 162 round number. Okay. Overall, CAD yen is neutral in March. It's flirting the last 3 days with the 20-day moving average. So for the time being, remains neutral. Only a move back below the 160. I mean, this is a long term, okay, medium term, sorry. Only a move below 160 could suggest that a new downtrend has started in the medium term. But that's not the case for the time being. So keep an eye on 162.45 and 162. Okay, bearish cross. Stochastic keeps declining, hasn't reached oversold territory yet, so there is still steam, there is still space. RSI, it is oversold, but it's still pointing lower, so there is still space to be covered apparently. George, better close, bro. Okay. And silver. What can I say about silver? It should be the same as. Okay, guys. Silver. Okay, silver. The very last one, I'm afraid, because I am the one running out of steam right now. I'm tired. So overall, overall, a clear downtrend, okay? But we have seen a 4 days floor over here. So that should be a line that you should have on your charts, either in your long-term traders, medium-term, or intraday traders. Why? Because it's a key support. This is a support that has been held for 4 days in a row. Okay, we have seen a rebound though, right? But if I connect the latest fractals, you can see that that rebound doesn't change the overall outlook, okay, because it's still below 200-day moving average, below 20-day moving average, and below the trend line when I connect my highs. So this looks to be just a rebound, a correction before another attempt to the downside. MACD negative, so overall, the silver remains to the downside in a downtrend. Intraday now, and for helping our dear friend Jasper. Ooh, 30 minutes chart, bam, 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 clearly overbought. But RSI and stochastic keep rising, dear Jasper, so there is still steam. Okay, so next. Okay, I need to find resistance support level. So let me use this. Oh, nice. So 61 is at 2075, 2076. So that would be nice. That would be crucial because it's over here that you might see the technicals being triggered and you might see a retracement. So 2076 is your immediate resistance level. Okay, and let me double check something. Sorry, I want this, and sorry. Sorry, give me a second. I want to add the... Yeah, finally got it. So I'd already breached it. It already broke 161 Fibonacci extension. So yeah, that's the 2076 is your next, is your immediate resistance level. And since it's a 61.8 Fibonacci level, the asset might be seen to struggle to break that level. If it breaks it though, then you can turn your attention to Monday's peak, so 21.24 and 21.36. But that's just intraday. That's temporary. There is nothing indicating that in the long term, the medium term, this downtrend will change. If and only if we see the asset crossing above 20-day moving average, and actually it needs to cover at least half of these losses. Okay, so okay, euro dollar, one more thing, euro dollar 4 hour chart. I think I've done that, Jorge, but for you I will do it again. It's the last one, guys. I'm quite tired. Sorry, we're live for nearly 2 hours. Oh God. Yeah, it seems that fear dominates over here. Dollar has significant losses. It's Friday, it's the banking sector, and that screwed up the NFP number. For our chart, next resistance just 20 pips higher, 106.93, and the 200 could be used as a nice resistance area as well. Dear Jorge, the momentum is still zero. I RSI and stochastic, they show that there is still some steam, but we need to be careful because the asset might breach 107 and pause and struggle. So next area to be seen, actually next resistance is the 107.14 territory, okay? But yes, this boost looks a bit limited. You see MACD is still negative to 0. So we need to be careful. We need to see momentum increasing. We need to see momentum rising and being positive in order to believe that the euro dollar might see further gains above 107. Okay? For the time being, all these bullish buyers, all this buying pressure looks limited. It looks that it will try to retest this area, struggle, and then pulling back or consolidate around it. But it's an area that it has been held since the 15th of February. It's a very strong resistance area. So we might see the asset retest it, breach it, and then retrace. Okay, because the momentum is still 0. It's not indicating that we might have a further upside. Yeah, if we see it breaking above 107.14, then things will change. Things will change, but not for the long term. Let me double check some things. And there is another. Sorry, just a second. Yeah. Okay, if and only if we see the asset extending above 107.14, then the next ceiling is at 107.50 and 107.75. Okay, but only if we see it extending above 107.14. Joseph, you need to contact support. I cannot help you. Okay, guys, I will end this session. It is way too long for me. I ran out of steam. Be very, very careful. The markets have found a direction, but be careful because that might be temporary, limited moves. It triggers important technical levels, and then we might see running out of steam soonish. Be careful, and I'll see you again on Monday for another very, very interesting and volatile week, especially in Tuesday and Thursday. So on the inflation number and on the ECB meeting. Okay, thank you. Have a great day.